How's everyone doing? Welcome back to Creator Talk. We have a very exciting episode tonight. And actually, I really got to shout out to Alex, one of our guests. He was the one that really pushed for this, and I'm glad he did because I've been learning more about options trading. And as I've talked about options trading just on my channel recently, I've had a lot of personal people reach out that want to watch the show tonight and learn how to use options as a strategy in the portfolio. And as I've talked about options trading just on my channel recently, I've had a lot of personal people reach out. Watch the show tonight and learn how to use options as a strategy in the portfolio. And as I've talked about options trading just on my channel recently, I've had a lot of personal people reach out. Feedback. Oh, can you hear that? Show tonight and learn how to use.
Yeah, I can hear the feedback. Is it me?
And as I've talked about options trading,
if you have YouTube,
oh, yeah, feedback. Somebody.
Can you hear that? Show tonight and learn how to
use. Got YouTube up.
Somebody mute their. Everybody mute themselves.
Yeah.
Oh, it's Rick.
Somebody mute their. Is that good?
Yeah, I think that's good.
I think we got it now.
I didn't know I had another tab open. I set a reminder earlier today. Sorry.
All right. Not sure where we lost you, but yeah. Long story short, Alex said we got to put this episode together. We need Gerry and we need Dave. Dave could not do it last week, so he said cancel the show. We'll wait till we get Dave. So Dave is here, and we got the whole crew. And really excited for an educational night. We're going to start more elementary for people who have never traded an option before, as Rick's never traded an option before. I'm new to it. Gerry's about 6 months in. I'm not sure how long Alex has been doing it, but I know Dave's been using the strategy for many years. So we have all walks of life in an options journey. And I think we're probably talking more selling options tonight as an income source, right. But I'm going to share out the videos to some other platforms. We'll go around, let everyone do their introduction, and hop into it. So, Rick, why don't you go first?
Absolutely. Hey, everybody. I'm Rick, the Helpful Entrepreneur. Yeah, that's about it. Don't waste any time on me tonight. Let's get to the all-star team here. The rest of the guys. Let's go to this guy here.
Hey, guys. Gerry from the GW ETF channel. Kind of funny that I've been evolving as far as a channel is concerned from, just telling my life story in the beginning to ETF reviews, and now I'm doing options, but I don't know if I'm going to turn my channel into an options channel. I doubt it because as we discuss this further along, you'll notice options are very, very convoluted subject that's very hard to portray and to get across. So just glad to be here, and thanks for having me.
Cool. My name is Alex. I run the YouTube channel Blood Phantom 81. I make videos about investing and trading and compounding my account relatively quickly, or at least that's the goal. I don't have as much experience in options as these. It's more of supplementary strategy rather close anything primary strategy. Can I just say, actually, I think this is the most lineup that Creator Talk had. I think this is going to be awesome. So yeah, anyway, that's my intro.
Also, real quick before you go, Dave, everyone's channel is linked in the description below tonight. So definitely make sure to check out their channels. You can learn a lot more about options. They do cover it on their channel. So I just want to make sure I plug that. All the channels are linked below.
Awesome.
I'm Dave, Hidden Freedom Investing, and my channel is definitely not all about options. It's an element of part of the investing, and just like Gerry said, basically, I'm not going to turn the channel into just strictly options because it's just a part of the channel. I've been trading options for about 13 years now. Granted, the strategy that I'm using today is not necessarily what I was doing 13 years ago. So I've day traded options, I've bought options, and probably in the last about 8 years or so, I switched to selling premium, and that's what we're going to probably talk about mostly tonight. But also, it looks like Alex didn't get my overnight delivery FedEx with dry ice in it for the steaks for his dog or his neighbor's dog.
No, actually, I did get it. I got it today, this morning. Thank you.
You're welcome.
Awesome. So I think I don't know who will be the best orator at just kind of plainly explaining what it means to sell a call and sell a put. Anyone want to take a stab at this? Gerry, you want to explain what it means to sell a call and sell a put?
The basic explanation of it is selling an option is just that. You're selling the right to either buy or sell a set amount of shares at a certain price at a certain time. So, and that's essentially it. You're selling a right, a contract to either be obligated to purchase shares, but you don't have to purchase the shares. You're selling a covered call against your shares that you own. If you own 100 shares, you'll sell a right to somebody to say, okay, I will buy your shares at $100 if it gets there, and I'll pay you this much for that right. So if that makes sense.
Well, Rick, answer that question. Someone that's never sold a call. Does that make any sense to you?
Yes, it does. But within a range of time, or it has to occur on that certain date?
You're selling the right.
Yep.
But you're selling that contract, but you can always basically renege on your contract. You do not have to hold it to that expiration date. You do not have to. So that's part of my strategy. But the basics is you can let it run to maturity. You can let the contract run to maturity. If and it depends on whether the share price is above or below the strike price on that date is what will happen. It will either be your shares will either be taken from you, or the contract will be expire worthless, and the contract owner that you sold the contract to will walk away with a loss, basically. If that made any sense. Hopefully it did.
If I could just add to that, it's entirely in the seller's control how long you want the contract to have in terms of time, right? If you want it to expire in 1 week, then you can do that. If you want to do 2 weeks or 3 weeks, then you can do that. And with each additional week or day that you add, the contract is more expensive because it's more time for the contract to be right. So yeah, totally in your control as the seller.
Excellent. And as a seller, would you say we're trying to find premium as a seller?
Yes, we are a options premium seller, like an insurance salesman is a good way to say. So, you can go out 2 years if you wanted to. It's called a leap, right? I bought leaps recently, so that's a whole different ball game. But I guess, what are your questions? What have you heard about options? Like what have you heard on the street or through the grapevine about options? Whether it's selling or buying, what are the horror stories that you probably heard? Because that's what you probably heard, probably from the buying side, most likely.
Yeah, I've heard the horror stories of people, getting their blank handed to them, as we were saying earlier. But also there's people that are just making a crap load of money. They're doing extremely well at it. So is there a kind of like a flow, like a system that you can get into and realize
with options, there's so many different ways to skin a cat with options. That's the thing. Like, everybody has their own strategy. No strategy. I mean, obviously there's some wrong things to do, obviously, right? Yeah. But what Gerry does might not be what I do. Like, what Randy does might not be what I do. Right? Randy's way more aggressive than I am with his strikes than I am, which makes me sleep better at night. But he makes $30K a month versus I might make $3,000 or $4,000, right? So there's a whole bunch of different ways to skin this cat here. The reason why I don't like buying options is you got to have basically 3 things right at the same time. All right. Well, we're relatively in the same time. If you did a weekly option, then you have to have the stock right. You have to have the direction right, and you have to have the timing right, pretty much. Good luck getting those 3 things right. Guess what? I can sell that option, and I put all 3 of those things in my favor, right? I can be wrong and still be right. That's the great thing about selling options.
Explain. Give me a scenario where you're wrong and still right.
Let's just say Tesla is $1,000. I think it's not going to go to $700 in a week. So I sell an option and I collect a $50 premium on it. It doesn't go to 700. Let's just say the stock goes up. I keep that $50. If the stock goes down to $750, I still keep the $50. That's the reason why I can still be wrong and be right.
Huh.
You're selling a put there?
Yes.
Okay, but also you should, you know, a lot.
I do the same thing on the call side as well.
Yeah.
A lot of us in the options group here, including Gerry. I'm not sure about Alex, but we do strangles too. So we might sell extreme ends of like Tesla. We might go up to like 1150, sell that side on the call side, and the bottom side sell like a 500 or something like that. So we're collecting on both sides.
Got it.
Yeah, but on both sides. And you think that's? I haven't done that yet to a stock on one stock. Is there any particular reason to do that?
Well, there's a great thing about the reason why. I mean, obviously, if the stock market goes down, all your calls are pretty much going to print money for you, just like Jay Powell does, right?
Mm-hmm.
Okay, so that's the great thing about having kind of a mix of both puts and calls on. Is the stock market goes down, you can still print money. If the stock market goes up, you can still collect on the put side, right? The other thing is also it really doesn't cost you any more money in buying power. So if it costs you $20,000 to collateral and buying power, if you sell a call side and to basically make the strangle, that really doesn't cost you anything at all as far as collateral. So why not put it on? It's almost free money at this point.
And I want to get into it later. I think you should retell your story of how you had some awesome cash secured puts on going into the pandemic, and had to ride that baby out. I think that may talk a bit more to the risk of options, even though you were in good companies, but you were holding a bag for a while.
Yes. Well, I mean, there was a couple different ways I could have dealt with that too. There've been about 3 different ways I could have dealt with that. I chose to take the stock, but I would probably just roll at this point with where I'm at now in the strategy. I probably wouldn't take the stock, but it really wasn't that big of a deal even taking the stock because they were solid companies. Now, obviously, if it's a meme stock or an FD or something like that Daniel's talking about, then I don't know. I mean, you'd probably really want to roll that sucker.
So let me explain to the way I remember it, and then I want to hop into Gerry's last 2 months and compare and contrast how the strategies worked for him. But Dave, back in March, put on cash secured puts on Apple, Microsoft, and Facebook. Am I right?
Correct.
Great companies, love to own them at these lower prices. But in the time that option expired, and tell me if I'm wrong here, but let's say for Facebook was around $190, and you did a cash secured put at like $175, thinking that if you were to get at that price, that's great. By the time you had to take ownership of Facebook, it was a $150 stock, and you had to pay $175 for 100 shares. So you had to overpay for the market price.
Yeah, what happens?
I mean, that's such a rare thing to happen. I mean, obviously stocks only go up, right? But I mean, the thing is I sold like a 10-day maybe DTE. That's days to expiration for anyone who doesn't know what DTE is. And there were really good prices on all 3 of those stocks. And the stock market just had an amazing, sell-off and literally in a 5-day period. The most probably ever in history, right? It was like a 10% decline in like 5 days. So that's such a rare occasion. I could have rolled those stocks down and probably been fine and just doing that, but it wasn't where I was at in the strategy at the time, so I took the shares.
So I'm not as knowledgeable in rolling, and I want to talk about how you guys utilize leverage too for options, if that's something to talk about.
Sure.
But we'll probably get that later. So guys, if you have comments on the comment section, and also Rick, as someone who has never traded options before, I remember it took me I watched Dave's channel for probably a year and a half now, and heard him talk about options, and I couldn't really conceptualize it until I actually did it. And maybe that's just me. I'm just not I don't not have that level of IQ to just hear something and just get it. I had to actually do it, and And now it just seems like for me, I'm using it for such a small portion of my portfolio as I gain comfortability, where for a lot of it, it feels like easy money. And this is where
you started with covered calls, right?
I'm doing cash secure puts right now. I'm running like 3 or 4 things a week. I'm trying to buy Palantir cheaper, so I keep on doing a cash secure put on it. And that's just something we should talk about too. If you want to buy a stock, why not? And you want to buy 100 shares of it, why not do a cash secured put on it until you get it? So what you're saying, and I'll explain this the best way I can, but you're saying I will buy the stock if it goes lower, a stock you want to buy. And if it doesn't go to the price that you want to buy it at, you collect a premium until you actually get it.
You also have to be prepared not to own it too.
Yes.
I mean, you could sell at the money, or you could even sell in the money, collect the premium, and just take shares. I mean, there's so many different things you could do.
But
if you think the stock's going to drop and you would like to get at a lower price, then yes, you could go the lower price. But it's just what Gerry said. You could be waiting a while.
So can you do
or you might have to end
stock, right?
Yes, pretty much any stock. Any stock that has options.
Okay.
Including ETFs.
Nice. Good to know.
So I want to jump into Gerry's experience of his time doing this, especially the last 2 months, and then I want to hear because Alex hasn't really shared. He's really transformed his portfolio strategy, and I think options is a big part of it. And I want to hear about that next. So Gerry, how have the last 2 months been?
I'll say December was great, as all of you know. But like I said, like you said, you need to just get in there and do it sometimes
Mm-hmm.
to really know. And you need to get your butt handed to you once in a while too. That way it just gets you grounded and gets you to know what you're doing and what you're doing right, what you're doing wrong. So it's not a complete walk in the park. If you're like, for instance, December, I had a good December. And
And Gerry, is there a way to disclose how much you made? You said on your channel.
On December I did $6,500 in realized income. On
$6,500 from pressing buttons on your phone.
Dude, the most impressive part about that, the most impressive part about that $6,500 is this account's relatively pretty small. That's what's the most impressive part about that.
How much cash do you have dedicated to generate that much income?
I'd say around
40,000. I mean, that's a nice return on capital in a month.
Well,
right?
that's what you were talking about with interactive brokers, though, or using leverage to boost that return. Now, that could be a double-edged sword, of course.
Margin call.
Yeah, if you get a little too aggressive, or you play the wrong stocks, which I did. Okay, that's what I did here in January, beginning in January. I think I put a little pressure on myself because I saw what I did in December and thought, because I've been in business for a long time, so you're always thinking, okay, I need to beat my numbers, right? And any business, you run, you look at your numbers and you go, okay, let's beat last month's numbers, or let's beat last year's numbers, and so I think I put that pressure on myself, and I went in and I played some hype meme stocks, and that's something that you probably won't want to do, especially you probably just don't want to do it, because
what names are we talking here?
I'm not going to give names because I don't want people to go in and do it.
Okay.
Okay.
But
I'll give names. If it's but anybody that watches this, I'm not responsible. Just to give you an idea of what Gerry's talking about, he's talking about the Fastleys, the Snows, the
lemonades
of the world. All right, so the meme stocks, right? The freaking, I wouldn't necessarily call those FDs, but that's the Wall Street bet junk. All right, so that stuff got some juicy premium, but it also can get you in a hurt real quick.
if that stock has run up 100% in a year, you probably don't want to touch it because it could probably drop 50% in a week.
Yeah, when you're selling one way out, like a 2% probably in the money, and then it goes in the money or it's getting close, it starts hurting you. So.
Yeah, so that's where I got messed up. Let me explain, because it can look like these meme stocks look like they just go up and to the right. You can sell a put as safe as hell, like you think you are, and it can drop 50% in a week. That's what happened to me. So that's what got me in trouble in January here. Now I could have rolled this put like Dave did, but it seemed like to me I'm in the wrong stock, obviously. Yeah. And why? So I actually took the loss. So
I didn't roll anything. I don't know what stock you're talking about. I didn't roll anything.
Oh, well, but you could have. That's what I'm saying.
Yeah.
I didn't. I took the loss on these because, for one, it was a bad decision to get into the trade in the first place. And why would I prolong that and just stay in a bad trade for longer and longer and longer? So, I took my lumps. And I think everybody needs to take a lump every now and then. It helps you. It helps you grow.
The issue that Gerry's talking about is it depends on the stock, whether you want to roll it and roll it out, because you could be rolling this thing for 6 months. You could probably be rolling the thing for a year. It just depends. If it's a shitty stock, you could be rolling that thing for a long time, if not forever. You know what I mean? Like, look at Hyliion. What if you're in the 50s, right? You're rolling that thing all the way down to freaking zero. So, if you're in like a Microsoft when it drops, I feel comfortable rolling that out, keep rolling it until it comes back. So the issue, that one of the downsides with rolling is you're going to just tie up buying power for months on end, and that's what Gerry's running into. So he decided to take a loss to free up that buying power, and he can just make it up.
So that sounds like one of the huge pitfalls of selling options. I think it might be helpful towards the end if about some other pitfalls. Not right now, just to keep in mind, maybe as like a disclaimer to the folks that are trying to get into it.
Fair enough.
Well, Alex, can we hear about what you've been doing? You told me about you changed your portfolio strategy. Like and you told me briefly over DM, like you're letting your high flyers run and dedicating cash to this strategy. Am I right? Is that what you're doing? You got some stocks you think that are high flyers and run a wheel?
Sort of. Well, from the beginning, I think, I've been trying to come up with a new trading strategy. As you put it, I don't want to limit any upside. But thinking about a trading strategy, there's I kind of think about it from like a core perspective, right? What are some of the fundamentals that any trading strategy should, especially as a swing trader, or as a buy and hold investor, which, by the way, I'm starting to become a little more of a buy and hold investor. But when I kind of break it down to the most fun principle of investing, it's basically buy high, sell low, right? So a kind of addition thing that I add should adhere to that or force me to think in those terms. And so as using selling premium as kind of just not a core piece, but maybe just like another piece to kind of help keep me on track has been super helpful. So, for example, like I think maybe 3 different use cases for how I use selling options. So as I mentioned, I'm starting to transition into more of a buy and hold investor, especially with high-tech names, particularly software names, even genomic stocks and other, kind of, I'm not going to give any like Gerry, but yeah, stocks like that. So, I used to hold these kinds of stocks, right? But I wasn't making any money on them in terms of passive income. So, options income is a way to sort of pay yourself a dividend with stocks that you already would like to own. And so I'm starting to use technical analysis as a way to kind of optimize that dividend, right? Can I pay myself more of a dividend this month or less of a dividend that month, right? And so, excuse me. So you can have Facebook paying you a monthly dividend because of options, right? Our founding fathers, when they were writing the documents for our government, what they said was, everyone should be able to get it completely. But it's kind of the idea is that like this should be so crucial to any like tenant. So getting dividends is one use case. The other use case is basically using a hedge. So obviously, if you want to hedge your stocks, you can sort of cheap put. But selling covered calls in itself can be a hedge, right? Because if you really do want to get out of a position or don't mind to get out of a position, especially at that price, you can pretty much sell cover every single share that you own. And if it's super close to the money, you get a pretty hefty premium, right? And so just the fact of not having that much to lose in a sense, you have so much to gain in terms of premium. And if you're okay with selling those shares anyway at that price, let's say it never gets to that price at a super hefty premium. And so, but the great thing about this hedge is that unlike a put, you're not losing money if the stock goes up, because you can have a hedge, let's say 3% above the share price or the price that you want to sell at. That stock can still go up 1 or 2%, right? Let's say it never hits that strike price. That's a hedge where you still need even on. And if anything, you can use the money that you get from your hedges to literally buy additional hedges, right? You can actually start to buy puts. And so that's another thing, is that income that you get from the covered calls, you can pretty much do whatever you want in terms of making your portfolio a bit more well-rounded. And the last use case I'll say is that it forces in terms of buying high and selling low. Because essentially, if I'm doing a strategy where I'm relying on the market to perform well, primarily, it's not very reasonable, right? Because the market might only return 6% 1 year, and much better than that. But the idea of if I can get my shares called away 10% higher than the current price, right? And every time I want to buy, I say, okay, I'm only going to buy 5%. It's just like logical to make you think in those terms. And because if I wanted to sell shares before, like let's say last year, I would literally just sell shares, right? I would just say, you know what, I kind of want to get out of it, let me just sell shares. But now if I say, you know what, I'm only going to do it if this price, and sort of force myself to think in those terms, and I'm holding for long and maximizing my returns in that way. So yeah, just a awesome way to like think about investing.
And so, yeah, I mean, those are all like, so to me, that sounds like a very conservative way to use it, the strategy. I kind of understand where Gerry was coming from, where, with the, playing around with these stocks with juicy premiums that can fly a lot. Like maybe you'd be careful with those if you're getting into options trading. Would you guys say that's right? Really if you just use covered calls with stocks and catch your puts that you wouldn't mind having in your portfolio that are solid companies. Is that a good form of risk management?
Yeah, I would say so. I mean, I think that's kind of what I try to go by. Yeah, I don't naked calls or naked puts yet. And so, yeah, everything that I sell calls or puts on is stuff that I wouldn't mind owning anyway, or that I currently own. So yeah, it's not really a core strategy, just supplementing.
So Gerry, when you got into a stock this month, it was a stock that you didn't want to own, so you just sold it at market, or did you turn around and start selling covered calls on it?
No, it was a naked put, is what it was, okay. And
I'm gonna sound dumb here. So it's not selling a put. What makes it a naked put? Did you buy it?
You don't have the money.
It's what you're wearing when you do it.
Yeah.
Okay. How is the broker allowing you to do that?
It's leverage. You're
doing it with leverage. Selling it with leverage.
I'm not on margin, but Interactive Brokers, what they do is they give you a 4-to-1 ratio on your buying power of your deposit. So if you have $40,000, you can control up to $160,000 in stock. You not quite, because there's some complicated math there, but they do give you that much buying power.
We typically run about 50 to 60%. Sometimes we run a little hot, depending on if stuff's already in the green or we can close stuff out. But I just wanted to comment real quick on what Charlie was talking about over here. He was talking about buying a leap and then selling calls against it. For anybody that wants to look that up, that's called a poor man's covered call. So I know Cody was interested in that. So look up poor man's covered call.
And if you don't mind, just explain it. So again, a leap was 2 years out.
So a leap technically, I mean, could just be a calendar year out. So you could buy a 2-year leap or something. Let's just say you buy a 2-year leap on Apple or something like that, and then you can start selling covered calls. Sorry, excuse me. What?
Is a leap going up or down?
What do you mean? It's just a long extended. There's no difference between a monthly versus a leap, other than that it's just a long term. The contract's the same. It's just a long-term contract.
It could be a call or a put.
Could be a call or a put. Yes.
The poor man's covered call, though, is you buying a deep in the money. This is basically a deep in the money call. Okay, so say you buy a $50 call on Apple, right? It's going to cost you about $70. I'm just making up numbers here. $70. So that's everything's times 100, right? So you got $7,000 to buy that $50 call. Now you have control of 100 shares at the price of the premium. So your break-even price is the cost of the premium and the strike price. So you spent $7,000 on or $70 for that $50 call, and so 70 plus 50 is 120. That's your break even. So now you can sell monthly calls against those 100 shares or that contract.
Technically, it's cheaper than owning 100 shares of the stock.
Yes.
I mean, Gerry gave an example of going down to 50, but you could come way up and it might cost you $3,000 or something like that. So here you're controlling, 100 shares of Microsoft or something like that for $3,000 versus buying 100 shares at 120 or whatever it is or something like that. So it's just, that's why they call it the poor man's covered call, because, you're not really owning 100 shares yet. And you're still selling calls against it.
Is this with any broker? So if I buy a call on, let's say, Microsoft over a year out, and I can just take control of the premium. I don't have to buy 100 shares. It's over a year.
It depends on the broker. Not all brokers will let you do it, so you just have to check with them.
Yeah. And again, real quick, so I just started using Robinhood. I think this is good for me and Alex. What I'm thinking about doing is taking $50,000 and just opening an interactive broker's account and just giving you guys' experience and the light conversations that we've had and talking it up. But I want to really hear the pros and cons of it. Why should we use interactive brokers versus any other brokers? We talked about 4-to-1 leverage. Dave, you've been using it for a long time. Why should we use interactive brokers for options?
Well, I mean, the 4-to-1's great. It's a great platform as well. Fills are really good and it's pretty cheap. I have used Robinhood, but never for options. I have heard of other people. Randy's a good example. He tried to use Robinhood, but the fills were really bad, so he just gave up. So that could be an issue because, every cent is going to cost you $1. Even though, interactive brokers charges commissions, it's still any ranges from either them paying you a commission to trade, or it could cost you up to about $1.50 or something like that per trade. I'm already up to $159 just for this month of commissions alone, but I've made $3,000. So that is really nothing. I'm not really worried about the commissions. The thing is you got a real platform in front of you, a real fit client. You're not trading off a phone. So I think that's key there. You could do it from a phone, but I mean, I don't know if Gerry does, but I wouldn't trust it. There's no way in hell. There's too much going on.
Really? I'm never in front of I'm always moving around. So like investing on my phone, and
you could do it, I think, but I got scripts running at the same time and it's pulling from the API and doing a bunch of other stuff. There's a lot of research that I'm doing there, and I couldn't imagine doing that from a phone. But I mean, I'm also a Gen Xer, so
I can agree with that. I mean, I will say like Robinhood does have a desktop platform, but it's just basically mobile on a browser, so it's nothing special. With Interactive Brokers, like there is the browser platform, but what they're talking about is I think it's called Trading Workstation, where it's literally like an app that you download to your desktop, and you can have so much stuff going on, much customization and charts and graphs, whatever you want to see. It really feels like you're a trader going into war every time you open up your laptop.
Is that how you feel, Gerry?
Yeah. I started with Fidelity, and it was okay, but it didn't have that. Well, it didn't have 4-to-1 buying power, and that's really what juiced me up as far as income is concerned. But if you get by I think you pay, people get stuck on the commissions, and I think that even if you got free commissions over on Robinhood and you're paying for it on IB, I have a feeling that you're paying for it anyway. Whether it's free or, I mean, if it's free on Robinhood, you're probably paying for it in some sort of way. You just don't see it because, let's face it, there's no free lunch. So somebody's paying it somewhere. But I like the platform.
Yeah.
Being on the West Coast, man, I got to wake up at 6:30 in the morning though. That kind of sucks.
I saw it here.
Yeah.
But I'm doing it now, and
oh, go ahead.
I enjoy it. So, no, I'm good.
I was gonna say it also depends on the strategy that you're trying to run, Ryan, because it do want margin. Like Robinhood just will really cut it because since there's a huge influx of new users that are joining Robinhood, and so Robinhood is forced to create a bunch of guardrails. And so when we're talking about margin, for example, there's be more limitations on how much you actually borrow and stuff like that. And so, actually, I don't know when your birthday is, Dave. My birthday gift to you is that I opened up Interactive Brokers accounts. And so it's possible.
You're loving those reports, aren't you?
The P&L, man. No.
Loving those daily reports and those graphs in them.
Yeah. It's possible that I make the transition little by little, right? Because I will say Interactive Brokers is pretty overwhelming at first. I don't know if you guys can speak to that as well, but they're going on, especially from Robinhood.
I've heard people say that. Yeah, I've heard people say that.
Yeah, it was overwhelming for me, for sure. And Dave's got a good video on setting up Trader Workstation. I watched that about a billion times. And, but I will say this about Interactive Brokers: it's not. I don't think it's an end-all be-all broker. I think you have to have another broker alongside it. I don't know, because IB is kind of stuck old school ways in a sense. They don't have a fractional drip, so if you're holding long shares, if that company pays a dividend and you don't have enough to buy a full share, you'll just get deposited in cash. So
that's the reason I went to Schwab. So
yeah.
for the dividend portfolio, I can say this: I've been using IB since 2011. And I've seen a lot of changes with IB for the better. So a lot of things have changed. Robinhood helped with that, forcing them to. I mean, it was already a low-cost broker to begin with. That's the reason why I started using IB 9 years ago. But they're not a hold your hand broker. They're not going to hold your hand. They expect you to know what the hell you're doing. The lingo is a little bit different too. I mean, most brokers like Fidelity and Schwab and all that, you know, if you're going to sell a put or something like that, it's going to say sell to open, all right, or buy to close. IB doesn't say that. It's just sell and buy. That's it, right? So it's a negative number and a positive number. So if you expect hand holding, then go to a Fidelity, go to a Schwab, try to get approved for options, because that's another whole ball game there. You got to get approved for options, right? So I think Robinhood's pretty easy to get approved. I've never heard of anybody getting denied at Interactive Brokers yet, but I bet you Fidelity and Schwab is a lot more difficult to get approved for.
So guys, which one would you recommend? Fidelity, Schwab, for like a beginner like myself? Which one would you guys recommend?
I would
Depends
say
on what you want to do.
yeah.
No.
Yeah.
I would
If you
actually
just want to do cover calls against dividend stocks, IB is not the place.
I would say whatever broker you're in, probably start there. Probably start there because you're already comfortable with what you're doing.
Yeah.
And, you know, as you learn it with what you're already comfortable on, and then you can step up once you're comfortable and learn a new platform, because it's a big learning curve going from a Fidelity or something like that over to a IB trader workstation. Totally different ball game.
Got it.
But also keep in mind, you might not be approved for options right now, so you may have to enable that. Depending on what broker you're using, there's different levels too. Level 0, 1, 2, 3, 4, to 1, 2, 3. IB, I don't think it's just on or off. I think they just give you everything. But you know, I mean, if it's a retirement account, for anybody that has a retirement account, you can only do certain things in a retirement account. You can't use margin or anything like that. So you're stuck with covered calls and cash secured puts, if I'm not mistaken, and some other strategies.
Thanks.
So Rick, well, let's roll to you. So any stock that you own 100 shares of today, you could go and sell a call and get paid premium instantly. That I thought was really cool. It's like I don't have to wait for it. It honestly goes right into my account. Like that's pretty cool. Like it's very gratifying. So when you first start out, so any stock that you have a large position, 100 shares of, could be producing you more money. The risk that I found was if there was a stock I really didn't want to sell, and if it were to get called away, you know that may not. You don't want that to happen. But if you put the call far enough out where it's more unlikely to happen, you can just collect more money on stocks that you already own. These stocks could work harder for you. Like Alex was saying, with growth stocks that pay you no dividend, this is the way I can make a dividend out of it. So there's probably several stocks that you have 100 shares in that you could start tomorrow making more income on.
Yeah.
Let me give you an example. I have 12 contracts open on VYM right now, and it's $1 in the money, and it's got 30 plus days left on it. Okay. So I misjudged it. I mean, that stock or that ETF technically only moves about 7 to 9% a year, you know, and I gave it about a 6% move, and I think I gave it was 50 days or something like that. And it's already there. All right. So what am I going to do? Do I want to generate that $14,000 in capital gains when it gets called away? No, I don't want to deal with that. I don't want to deal with the capital gains. So I'm going to end up probably rolling that out. But obviously, I got 30 days. Biden can take the market, right? Let's not get political here. The market could tank, okay? And I'll be fine. It's just I got to wait it out, right?
So can someone explain to me, because I've never done a roll, explain to me what a roll is, how to do it. Maybe Alex could be more helpful if he's done one on Robinhood, because that's where I'm trading options now. But if you guys keep on saying that, if you're not in the situation you want to be in, you can roll it out. I don't know how to do that. So
a roll is simply buying back whatever option that you're in and selling one at a higher, lower, later strike price and strike date. That's all it is.
Don't let the name fool you.
Yeah, it sounds fancy, but it's
Sorry,
just buying and selling.
Yeah, basically exactly what Gerry said. It's just buying it back and selling another one out, trying to get lower, trying to get under it, or try to get above it further out in time, getting paid enough money to pay for the loss that you just took. Some brokers actually have an option to roll an option. All right. So you might be able to right click on whatever the position is and roll. You might have a roll option. Some don't. You might just you just buy it back and then sell another one out. That's all it is. Don't let it fool you saying that there's some other thing, because it might screw you up trying to find
the roll button.
Yeah, exactly.
Yeah, and let me just say that you only need to worry about this rolling mess. Oh, sorry. I was just gonna say you only have to worry about rolling and stuff like that primarily if you just share all the way. So back to Ryan's example, if you're making you want to make some extra passive income on your already existing holdings, and you sell something, and then just like Dave said, the YM, if you at risk for your shares getting called away and you don't want to deal with the capital, that's when you would roll. Otherwise, you don't really have to worry about it.
I'm gonna have to do one of these.
Wait till you're in trouble, and then you can come to Gerry or Alex or myself.
Yeah, I need a roll.
Yeah. Just like screen share, and we'll just tell you what to click.
Yeah,
we'll roll you out to a leap.
There we go. 4 man's covered call. So some of it's where I'm really learning, more stuff here. So I'm only generating an extra few $100 a month on, I'm doing weekly options right now, selling puts on a stock I don't mind owning, and
couple $100 you never had.
Exactly.
For clicks of a mouse.
Yeah, I spend on Monday. I roll them. I think everything expires on Friday. I go back on Monday, spend 10, 15 minutes, click a few buttons.
Try to put them on Fridays, or if you can, that way you get the weekend decay.
You put them on, and I
have a lot of stuff on right now because we have a 3-day weekend coming up. That's 3 days of decay right there, of free money that you're missing out on.
Ooh,
yeah, I love that. Like I usually try to sell to open. Usually on like a Wednesday or Thursday. Usually on Thursday though every day, because then not much happens on Friday, and then you got the weekend, which helps you in your.
So I need to know, if you sell an option, there's $50 in there. There's something we call theta decay. That's why we call it the theta gang. We're all theta gang people, because we're selling options. That decays every day, and the closer it gets to expiration, the faster it's going to decay. So you're going to have that Saturday and the Sunday and the Monday there of just free decay, right? So if you go into the weekend in something that's down on Monday, the stock might be right where it was closed on Friday. Guess what? That's probably a green position now because you had 3 days of decay.
That's why I've never held an option to expiration.
Really?
Never.
Wow.
If that's because, for instance, the Thursday or Friday, if you got a good 70, 50, for me personally, I only hold an option 1 or 2 days personally. But if I do end up holding it to that Friday expiration, I'll buy it back before the close. And if I want to still be in that trade, I'll sell an immediate one right after that for the next Friday to get that weekend decay that Dave is talking about. So I'll never let them expire.
So like I have 2 options expiring tomorrow. I don't even know how. So I could trade it, or
you don't have to take them to expiration. I mean, my covered calls I usually let go to expiration because they're usually just so safe anyway. Mm-hmm. But what Gerry's talking about, if you sold a put on Microsoft and the stock just goes up, you can buy it back 50% of the 50% of the value, right? Let's just say that you got $50 on it. It's going to cost you the 50 cents, right? And the stock goes up, you can buy it back for 25 cents. You just collected $25. You just, literally in a day or two or something like that. So
that's why I was saying earlier that you are not obligated to hold that contract to expiration. You can renege on your contract, or you can buy your contract back.
So okay. So right now, like Hylian, I have a call expiring tomorrow. Let me try to get here. The 12. There's my call.
Is that a put? Oh, that's a call. Okay. So it should say -1 if you scroll down, right? Your position is -1.
This one. Excuse me.
Yeah, correct. So you would go to trade and then buy it back.
buy it. So right now it tells me to buy it. The ask on is now 12 cents. I think I originally bought it like 40 cents or something.
That's right. Yep. It should be less than what you sold it for. And then you just literally buy one. It'll only give you the option to buy one.
Is it buy to close on Robinhood?
I think it's
Yeah.
buy.
Oh, yeah, exactly.
Well,
if you
don't
have
wanna
it,
buy,
you can just buy one back.
Some brokers might say that's the problem, that people get confused when they say options. I bought an option. Cody was talking about this. Like, I just sold an option. Like, does it mean sell to open or sell to close? Because there's two different things there. You got to make sure you
Yeah, exactly.
right.
Huge difference. And if I can just add to Jerry's great point there about buying the option. So, like in this example, right? Let's instead of $12 in premium, there was only like 3 left, which is totally possible. That happened. There's really no reason for you to just keep holding that back to expiration, because as Dave put it, since we want data decay is where your profit comes from. If that contract is only worth $3, then the minimum that you can get for the next 3 days, if you keep that contract open, is only $3. And so you're missing out, right? Because what you could do is if that contract has already lost most of its value, let's say 90% or something, right? You can open or sell another option and then start working the data decay all over again. And so
that's very true, because I've been running into issue where it'll hit 50% pretty quick and then it kind of sticks there. And I've never really seen one get up past 70% unless the stock is just flying, unless it gets closer to expiration. If there's 5 days left, good luck trying to get above 70%. You might as well just close it out and open another set. I don't do it with my covered calls because it doesn't really make any sense, because it's just, I only have so many things to go anyway and so much time. But for the IB strategy, it makes sense. There is some risk to letting them go to expiration as well, with something possibly dropping or going up after hours after the market's closed. It's very rare, but it could happen. It could go in the money, after the market's closed up to an hour. Somebody might want to exercise it or something, so you could get screwed that way.
Lot to learn.
Yeah. Any other horror stories that we should be pitfalls that we need to know about?
You can be assigned early. So, I mean, it's never happened to me ever, but I guess with a lot of these millennials and whatever's after the millennials, I don't know. It's never happened to me ever in 13 years of doing options. I've never been assigned early, but you can be assigned any time. So it's just, it's never happened. And by the way, if you're selling an option, and let's just say Jerry's the buyer, doesn't mean because he exercises that it's going to take my shares away or it's going to put me shares. It's kind of random how that works. All right.
Oh, okay.
It's not a 1-for-1.
So Rick, going back to you, what could you take away from tonight that you would actually want to do actionable in your own account and to adopt a new strategy?
Well, first of all, I got to turn it on in my account. I know I don't have that option for options yet, but I think I'm more like you, Ryan, where I got to get in there and look around and and play around with it, and just keep it really simple and really easy at first, and just slowly grow from there. Get that learning curve happening.
Start
you guys every so often, I need help. What the heck am I doing? No. But this is great, guys. This is really informative. This is a lot of little gems hidden here.
Dave, Daniel has a question for you.
Oh, yeah, I got dibs in all them. Sorry. No sloppy seconds.
Pressing the wrong button on a phone. See, that's another thing that if especially in interactive brokers, if you're not careful, you push a button, something's happening.
And those buttons are tiny, right?
Yeah. I'll be staying away from the phone, that's for sure.
It's not Fidelity for sure. I've done a couple of things in Fidelity where it would say, "Are you sure you want to do this?" Before they're
IB won't ask you any of that stuff.
Alarm goes off.
IB just lets you pretty much do whatever you want. If like just this week I meant to buy something back and I sold it again and added 2 contracts and screwed it all up and had to take a loss because I hit the wrong button. So
Whoa, really? Okay.
it's a $6 loss. It wasn't a big deal. But Gerry blew $20 just like that by hitting the wrong buttons.
Yeah, that was at 6:30 in the morning.
No.
Don't have your coffee in yet.
Yep.
So I have to ask for both Gerry and Dave this question, and it can allude to Alex too. But both of you guys, I think of this kind of investing as a way to supplement some kind of early retirement. That's obviously you guys have you're close to that journey, or you're getting close to that journey. How do you see options? Supplementing your income during retirement. Do you think you'll dedicate as much time to it as you do now? Dave, while you're out there hiking mountains, do you think you'll stop to trade some options? And then Gerry, while you're going in your RV, do you think you're going to pull over and stop and do some options? Like how are you going to use this in retirement? Is this an actionable thing that people can use?
Great question.
To retire. So we'll start with Gerry. Gerry, go first.
The way I'm doing it now, there's no way I can do it. There's no way. It's too active. I'm literally glued to my computer screen from 6:30 to 1 p.m. I'll take some breaks or I'll grab something to eat, but this is basically a job for me because, like I told you, I don't hold options very long. I don't hold contracts. Unless I get it wrong, I don't hold it for more than a couple of days. I'm usually in and out, take my profit, move on to the next one. And that's how I was able to get that December income. So as far as in retirement, yeah, I'm going to have to scale that in a way that's a little bit more passive. And Dave is starting to do that now. He's trying to get used to it, selling a little bit longer DTEs or days to expiration. I can do that too, but I'm enjoying the active part of it right now. But it's definitely something where you can't, like Dave can't go hike the AT and be gone for a month and have contracts on. He'll have to close everything out. It's not something that you can just, set and forget, buy and hold. It's not like that. So I'll definitely have to work out a strategy when I retire and get on the road. I'll definitely need some internet access for sure. But it depends. If I'm funding, if I'm needing the income, then I'll make time. Maybe I'll do it for a week, collect some money, and take the week or next week off. But if you're going to be gone for a long time, yeah, it's not something you can buy and hold. And I'm sure Dave will talk more about that.
I'm trying to transition to longer DTEs. It's been tough because so much can happen in 2 weeks. So much can happen in a month. Like ARC K is a good example. Before they had weeklies, like that thing would just run and just never freaking let up. And it's like, oh my God, it's like that's the problem I'm running into, where it's just letting it sit out there and, having it basically you're wrong in the first week. And then you got to wait for another 3 freaking weeks to figure out what you want to do with it. So I'm trying to work on less riskier stocks, safer strikes that are just way out of the money, probably the 2 to 3% probably in the money. I'm still trying to make 2% a month. And I'm already there pretty much now at 2% a month. I'm just trying to see if it can be done with longer DTEs and whether it can be done on lower strikes or safer strikes. But what I see is Matt Money made a video on it. I made a video on it. Basm just sold half of his stocks. He has a channel, by the way, to do just this strategy. He's making 10 grand in dividends like I am a year. We can make that in a month with our dividend portfolio, with that cash and doing options, right? So there's some things you need to juggle there. I made a video on it, called it coma money. I like to have that coma money too, because if you can get 3 grand coming in from that, that'll support you in your early retirement or retirement. And then you can use options to supplement that, right? I want to buy my wife a freaking Louis Vuitton bag or something like that. Then you just sell an options that week or that month to pay for that bag. If you want to get her a fake one, you just need a week. If you want to get her a real one, you might take a month, but it's just free money, right? So yes, it does require to be hands-on a little bit. Right now, a little bit more than I want to be hands-on, but I have the time. I'm in front of the computer all day anyway. But I'm trying to transition to more passive options plays that are just safe. Don't got to worry about it. They're not in meme stocks. They're not in FDs or anything like that. But I'll let you know how that goes to see if I can get that 2% a month.
Interesting. Alex, I don't hear you talk a whole. I think you're down with the FIRE movement, but you have these ambitious goals of having a $10 million net worth, and I can't remember the exact amount of years. But I don't feel like retirement is as soon on your radar, or if you can just feel like you can do that through portfolio management, probably also kind of throw some income in there. What's your thoughts in the future in retirement, and could options play a role in that?
Yeah, sure. So, I mean, the idea of the goal is to be somewhat ambitious. At the same time, like by me setting like a really big number by a certain amount of dates, ideally, somewhere along the way, I am going to be financially free, meaning like own my house, have a portfolio that's large enough to drip any kind of income want to additionally buy stuff. Obviously, like if I own my house, then rent wouldn't be that big of an issue. I'll just have to worry about property taxes and stuff like that. And so at the end of the day, my ultimate drip portfolio wouldn't need to be that large if I didn't own my house. But yeah, I mean, I would say as far as selling options to me is kind of the way to accelerate the entire goal, which is, growth, make that go faster, right? If I can use selling premium as a way to turn mine from a 30% to a 35% CAGR, then if you multiply that throughout the years, that's a huge difference at the end of 10 years. Right. And so, yeah, I don't see selling options as a way to get passive income. But I do want to go the passive income route at some point in the future.
Thank you.
I think it's a hybrid strategy for sure. I mean, it's really tough, I think, to not almost do this strategy because it's just too easy. It's easy money. And it can be tough too. I don't want to, steer anybody down the wrong route, but if you do things right, it can be really easy money. That's just like that you're going to generate, my $400,000 dividend portfolio makes $13,000 a year. With that $400,000, I can generate $13,000 a month real easy.
Isn't that crazy? And Rick, that's where I think about you and the possibility of what you could do with your portfolio is you have all these, great stocks. You have a dividend portfolio, you could, it could be working a little bit harder for you. So in that $400,000 portfolio, are you selling covered calls actively in there? Dave?
What was the question? Sorry, I thought that was somebody else.
I kind of jumped back and forth. I'm sorry. I thought it was right. In your $400,000 dividend portfolio, are you running covered calls in all those positions?
I am not. That's the whole reason why I went to VYM to begin with. So I'm selling covered calls in VYM, JPM, Microsoft, and Apple. That's pretty much it. All the other positions I could probably sell, but the VYM play was just a lot easier to deal with. So yeah, it's just when you got to understand that I got 2 different Schwab accounts plus my IB account. To do options in all those accounts, it's just too much going on. I wanted to make the covered calls in the Schwab account just super easy, set and forget, 1 month out, done.
Yeah, it seems like you guys are dedicating quite a bit of time to this as well, pretty much on a daily basis. And Gerry, really good point that you made. Obviously, you're gonna be traveling and whatnot. It's really gonna be tough to manage.
Yeah, I mean, another point to that is, what I'm doing is a very active strategy, right?
Yeah,
and you have to be on top of it to collect your money. Now, I'm married, and if I have all my money tied up in cash secured puts, if something were to happen to me, my wife would have no idea what the hell to do. Right. So that's where Dave comes in with the coma money. And that's what I'm going to have to do. I'm going to have to take some of this income and put it into coma investments so that if I do kick the bucket, that she'll be able to, have some investments that are generating income for her. And I'd have to figure out a way to, there's got to be I think there's a close all button in there. And, I'll have to write down something like, okay, if I were to go jump into this account and press close all and make a withdrawal, so
the gas station main shutoff valve.
yeah, emergency button only. So, it's definitely not something you can do with your eyes closed. It's not like buying an ETF or buying individual stocks. It's definitely a little bit different. It helps to know a little bit of technical analysis for sure to run these strategies. But definitely active.
The TA will put things a little bit more in your favor, right? Like I literally try to sell my puts right around the 200 period moving average, and I try to go way above the 52-week high. So just knowing a basic TA will help give you a slight edge, or just put something in your favor even more. I think Charlie mentioned that we're the house. We're selling insurance, but we're also like the house at a casino as well. Mm-hmm. And just to mention what Gerry talked about here, you don't have to do what Gerry's doing. That's just the way we've been doing it lately. Gerry's just an active trader. I'm kind of active right now, maybe not as quite as active as he is, but you can be a little bit more hands-off if you want to be. You don't have to be as active as he is. Don't get us wrong. I mean, I don't want you to think that you have to be in there and at your computer all day long. I mean, you don't have to be. It's just depends, right? Like if you want to be aggressive, like Gerry is, then you might need to be sitting in your computer all day. But if you want to be a little more passive, then you could sell 2 weeks out and look at it, a couple times a week or something like that, but not sitting for a computer all day.
So yeah, you can get into a system where like what Ryan's got, you got 15, 20 minutes on a Monday or a Friday, maybe in order to get those dead days. That would definitely work out a lot better.
That's enough. Yeah, that's fine. You could run into an issue where you could have took profit on something and then just went against you and you end up having to roll it or you got in trouble. That could happen, but that's just the problem. I mean, that's the risk you take with trying to be a little bit more passive about it. The mitigation to that is just be, better stocks, better strikes, safer strikes, use some TA there as well.
Yeah, the overall point is to make sure you're making the most out of what you currently already have. If you want to go like a more hybrid approach, I'm sure there's a whole befores with lemons, but another one is like you got to make sure you're getting juice out of the possible. And the fact of the matter is your portfolio could be making you a little bit more, which over the long run can really pay off.
Yeah, that's where I'm at with it, but I'm excited to try out some of these new strategies. Or we could just buy Bitcoin and go to the moon, because that's been I had to say it. But guys, we're coming up on the hour mark here, so we'll probably get more into closing remarks. I really appreciate putting this together, and probably wouldn't mind if you guys wouldn't mind maybe in a few more months as Rick probably adopts some of these strategies. I play around some new things. Maybe in a couple months, maybe get the gang back together. And like I said, I've had a lot of other people that since I started talking about options, like literally, like people are taking me to lunch and just like show me how to sell a covered call. Like, so I've got a lot of free lunches lately. That's been also a good perk.
That's what you use your options for. So
it's been really
lunches.
And just knowing those little fundamentals that have helped me make, again, a few $100 extra a month. And it just makes me think more about wanting to get 100, build up to 100 shares of a stock to start using it as a strategy. And I think it's as you grow as an investor, it needs to be in the toolkit. So those are
I think you're going to end up after a while. You're going to basically do what Gerry and I do. We don't even care about owning the stock anymore. I mean, obviously, I own a bunch of stock in a different account. That's the coma money, right? But I'm talking about a whole other account where you don't want to own the stock, so you're playing the game of not trying to own it.
Yeah, I have in my Interactive Brokers account, I only hold a couple of funds. That was just because I don't even know why I put those in there, to be honest with you. But they drip and I don't even touch them. But I have no interest in owning any shares in that IB account. It's all options. So
Wow.
it's
Now-
it's, go ahead.
I'm just saying, would you guys say as being like now that I've been doing this, I think I better understand the volatility of certain stocks now because I see how people play around with them. And is this where the volatility in the market comes from? Is just like not like to put it in a box, but like interactive brokers, like people just going in the war zone every day and just going nuts. Is that where the volatility of the stock market comes from?
We did a video on that, saying the options are causing the Hyliion, or it was one of those stocks, Nikola, was causing it to move. I think JMax said that. The option sellers are causing it to move. I'm like, bullshit.
Oh man, that's too.
So short, honestly, I would say it contributes. It's not the only reason why there's market volatility, but I would say because you're able to control hundreds of shares with little money, relatively, right? So, yeah.
I mean, not retail investors, but like there's a scan you can run, and say, I think they do it on CNBC. One of those Nigerian people or whatever does like high options or whatever, where there's a lot of volume, like 30,000 contracts. Yeah, that could move a stock, absolutely. But retail investors, I doubt it.
What about like the QYLDs? Like that's a whole ETF that Gerry covers. That about all they do is they run wheel essentially. Is that what the ETF does, right?
It's different than that. We don't actually entirely know what they do.
Gerry,
Yeah.
Gerry,
it's a little bit of a mystery. They do index options, which are not available to a retail investor. So it's a little bit of a hidden kind of a banker investing thing that's not available to us. So it's a little different.
So got Randy down here in the comments. He's a good example, making $30K a month consistently for a while now. Now it counts relatively big. I think it's about 400K, but he's looking at, he's got so much cash in there. He's looking at going to some coma money or getting in some ARK Ks and Gs and stuff.
Well, because dividends are irrelevant, you will be assimilated.
The thing is with dividend, when you look at a dividend, when we start looking at stocks now, like myself, and I see, okay, this ETF is paying 3%. Ooh, right? That doesn't excite us anymore. It doesn't. It's like I could do that in a month.
Can I do that again?
Yeah. I mean, that's the thing. You got to separate these things, right? Options is options. Coma money is coma money, and getting 3 to 4% on your coma money is great. But if you're doing options and you see that cash flow flowing through, it makes you think, dang, why am I buying hundreds of shares of this when I can generate it every single month? So
yeah, good point.
It does that this comment summarizes that. You will be assimilated because once you can taste that premium you get right away in such that you cannot get from a dividend.
And that's my thing is take it slow. That's why I said earlier, don't play these meme stocks or these high flyers. You can make just as good of money with large cap stable companies as you can with new IPO companies or high flying EV companies or high flying new tech stocks, cloud stocks that make zero money and are volatile as heck.
Yeah.
You definitely can do large cap. I mean, don't get me wrong. I'm going to still play some of those, but I'm going to do it in an ETF. Okay. So I'll play ARK K, I'll play ARK G, those type of things, because that spreads your risk out. That ETF will not drop 50% in a matter of 2 days, but an individual stock in there certainly can.
Right.
And if you're playing those individual stocks within those EV high flying, areas, you can get burned. So just be careful. Large cap stocks are safe. I shouldn't say safe, because options, they can bite.
I haven't seen anybody successfully scale it yet either. I don't know of anybody that has an account bigger than 400K doing this. Having $1 million account is going to be tough, in my opinion. I mean, maybe Randy would disagree, but there's going to be a lot more going on. Either more contracts or more positions. So there's a lot more to manage there.
Yeah,
Obviously, going from 400K directly to $1 million is going to be tough, because the numbers are going to get red fast and big. So working your way up there is going to be a lot easier to deal with it. But I just haven't seen anybody scale yet. So that'd be interesting.
Yeah. And it can get a lot more stressful. I can see it with bigger numbers for sure, because the moves that can make your daily moves, profit and loss moves, in a strictly options account will blow your mind.
Yeah.
I mean,
On the flip side,
you'll go up thousands to down thousands within hours.
yeah.
So
on the flip, you want to also talk about the idea of, if you have a larger account, it's possible to be safer. I think that might be a good point.
that is a good point.
That's my plan. I'm trying to do that now, because I'm already pretty conservative as it is. But even some things run for me, and that kind of scares me as it is. So I'm not like a Matt Money. I'm definitely not a Randy. Randy's got the size of nuts of like the freaking globe. So he's literally selling at the monies and just out of the money sometime. That's just not me. Like, I don't have the luck. I literally sold Intel last week, and then it flies this week. So that's my luck.
I thought about you the last couple of days. I'm like, oh, Dave must be happy, right? No. They got the new CEO and the stock took off.
Oh, right. Yeah, I thought of Dave too immediately.
I made a profit. I made pretty good money, but I didn't make the 12K like I would have made.
All right, guys. I'm early up tomorrow, off to Miami for work. So we'll just go through closing remarks. Any kind of last thoughts you guys want to put towards options, and anything else about your channel? We'll go in reverse order. We'll start with Dave and work it around.
No, I mean, anybody that wanted to watch this video, didn't catch the whole thing, watch it from the beginning. There's a lot of good stuff here. I mean, obviously, we just scratched the surface of options. There's a lot more nuances to it as well. Talk about probability in the money or delta or something like that. I mean, we didn't even really touch on that. So we talk about getting safe and all that. That's what we're talking about. So watch the video over again. Maybe we'll do another video, part 2 or something, or even email all of us or facegram us or something like that. Just to answer Rebecca's question real quick, it's technically counted as like short-term gains.
But technically, I heard if you buy it a year out, it's long-term.
Like a leap or something like that?
I heard that. I don't know if that's true, but verify that.
I haven't heard that before.
If you buy,
you're really collecting the money right away. It's not realized technically until you close it, but
yeah, I would assume short-term for most.
Yes, we do use scanning tools, Donald. I have mine set to 10 billion and above. That could get you, it could bite you if you go anything below 10. So I try to stick with 10 billion and above market cap. But we look at the gainers and the losers for the day, and sometimes we'll pick stocks off of there. But you still need to do the research too, because you'll get a lot of crap meme freaking FDs in there.
Yeah, I'll say, I guess if it's my turn, I'm just going to say, options trading, which is just the term options trading generally has a bad rap, but as long as you understand exactly what the risk to reward is, and to be honest, it's not even much of a risk as long as you're with the outcomes and maneuver the outcomes. It's really just, the education. So Ryan Giffen video about selling covered calls, I believe, and covered puts on Robinhood. So if you guys have a Robinhood account, you can try that. Dave has some introductory, but he just walks through kind of his options trade on a lot of his videos. So that'd be another great place to start. And then I know Gerry referenced some, I think it was Tasty Trades or something, that YouTube channel where you can watch hundreds of hours of content and get better at it. So Yeah, I mean, it's just a matter of education, I would say. So if you are interested in making more income on what your assets are, whether it's your left cash or your already existing portfolio, then it would be a great way to bolster your returns. And yeah, that's all I'll say. Just, be careful, but be educated.
Definitely. Be educated for sure. Don't fall for the get rich quick thing, because a lot of times you'll hear that with options. That's why I was very skeptical of sharing my December income out there, is because I didn't want people thinking it was some sort of easy thing, and not understanding that I'm using a lot of buying power that IB supplies, and it's not easy. So you need to learn. You need to take some time and learn it. I said a couple hundred hours, and that's probably good. And I would say, like Dave taught me, I learned a lot from Dave. That's how I actually got into all of this, is from Dave. And start with covered calls. You'll start learning how the lingo of selling to open and strike prices and days to expiration. Get comfortable with that. Then you move to cash secured puts. You start learning that lingo there. And then, if you're ready to fly, maybe you go into the things that me and Dave do, which are essentially naked options. But you have to, like I said, define your risk, or not define your risk, but control your risk. And that's definitely the name of the game with being successful, in my opinion.
Love it, guys. A lot of gems. Thank you very much for coming on the show tonight. You guys have said so much. Now I think it's time just to jump in the pool and start fooling around with this and learning more a little bit, step by step about it. I got, sit back and watch a lot of your videos. Learn as much as I possibly can about all this. But guys, you guys have said a lot. This has been incredible. Thank you very much. I hope this is really informative for everybody that was watching tonight as well. And as they said earlier, if you're just joining now, then please go back to the beginning and watch, because there's so many little, tricks of trade and gems that was said by the all-stars here. That's for sure. So
just no way you can go over it all in one hour video, 1 hour live stream.
No kidding.
Well, I think to add to that, and maybe you could leave it in comments section if they're rewatching, but there's been so much interest I've gotten from this. I really would love to have you guys on in some kind of routine fashion, because this is so good for me too, in my own selfish reasons. But I know that there's an audience for this as well, and I think having this almost as like a running series, I would really love to have you guys be a part of it if you have the time. But anyways, yeah, if you guys post in the comment section, if you want to see more of these types of videos, please let us know. And, we'll be back in 2 weeks on Rick's channel to see what the world's doing at that time. And just guys, thank you so much for coming on. I can't tell you how much I appreciate you sharing your experience, because is it like Alex was saying, this is really an education game. I feel like you have to get out there and start doing it, but you have to deal with people that have been doing it. But like I said, everyone has a plan until they get punched in the face. So you got to go out there and actually do it, and get your feet wet. So again, thank you guys so much. Thank you for everyone that participated, everyone in the comments section.
Guys. Yeah.
We'll be back in 2 weeks on Rick's channel. See you then.
Thanks, everybody. Appreciate it.